It's a true pleasure to host this event today with the University of Manitoba's Economy and Society Group seminar. And I'm very pleased to have Jesse Hager here with us. Jesse is an assistant professor in economics and labor studies at the University of Manitoba. His fields of specialization include political economy and public policy, the social economy and community economic development, and poverty and inequality. And he is also a research associate with our office. So I'll hand it over to Jesse to introduce our speaker today.
Thank you, Molly. Economics and Society is pleased to be co-sponsoring the event today. As part of the Department of Economics at the University of Manitoba, we offer undergraduate, master's, and PhD degree programs. The Economics and Society program stream places a greater emphasis on how the distribution of wealth and power affects the socioeconomic and physical environment compared to mainstream economics programs. Our program is both heterodox and policy orientated. So we have faculty members that provide courses and are actively pursuing research in areas including Marxian, post-Keynesian, institutional economics, as well as economic history. In addition to the standard economics courses, students can choose from a variety of approaches and research areas, as well as take advantage of an openness to interdisciplinary research. Now, it's my pleasure to introduce Dr. Marois. Thomas Marois is a reader of development studies in the Department of Development Studies at SOAS University of London. He's the author of the recent book, Public Banks, Decarbonization, Definancialisation and Democratisation. This was published by Cambridge University Press in 2021. Between late 2020 and early 2022, Thomas worked as a senior research fellow in the patient finance and public banking area at the UCL Institute for Innovation and Public Purpose. There, he was involved with the government of British Columbia's engagement with the Institute on mission-oriented innovation. He's currently a researcher at the Municipal Services Project and co-investigator in a SSHRC-funded four-year project studying public banks and public water around the globe, housed at the university in Kingston, Queen's University. Thomas is engaged with the Canadian Union of Public Employees National on its submission to the Canadian Infrastructure Bank five-year review in 2022, and is advising Public Service International on developing a trade union approach to public banks. Now, Thomas has indicated he doesn't have all the answers on public banks, but he's keen to discuss their prospects. Thomas, thank you for joining us today, and over to you.
Thanks so much, Jesse, and thanks, Molly. It's a great pleasure to be invited and to speak with the Canadian Centre for Policy Alternatives and with the Economy and Society group at University of Manitoba, both of which have long and a rich history of progressive economics and politics. So for me, it's particularly important to engage and to raise these discussions. And in terms of the topic of today, the question of the prospects of public banks catalyzing green just transitions, I think this is a timely and important discussion to be had in Canada. So thank you very much for the invitation. And without further ado, I would like to continue on here with my presentation. So I'm going to share my screen. There we go. And just to sort of premise here, again, thanks, Jesse, for that. The discussion I want to have today really sort of builds on, let's see if I can switch here, the book that Jesse mentioned that I sort of just come out in 2021. And this book was really written, I mean, it's a product of 15 years of research and study and these kinds of things, of course. But it was really conceived as sort of a foundation for a new discussion that had to be had, that sort of among social movements, among progressive governments, among academics and policymakers to sort of set the historical and empirical and theoretical basis for a new future, for a resurgence in public banks. And this is the first book in English that's been, academic book in English that's been written on the topic. And what I'm really hoping is this generates sort of a foundation for a resurgence in public banks, because it's certainly not the case that they're anything new or anything in particularly niche, which is where I like to begin my talk typically, is on the question of the world of public banks. And on this, what I like to emphasize right at the beginning is that public banks are pervasive. They've been around for hundreds of years. Some of the earliest ones go back to the municipal city banks in Northern Europe in the 1600s. There are more than 910 public banks in existence today. They're in every corner of the globe, from north to the south, and many of those are decades old, going back to early 1900s, even the late 1800s. They're also extremely powerful. It's commonly unknown that the combined assets of public banks and public banks, public financial institutions in general, control over $49 trillion in assets, and that they've acquired quite an institutional legacy of knowledge and expertise in functioning for many decades and in supporting different governments, municipalities, and societies around the world. And so in that sense, they're extremely capable. So the focus of the book and the sort of case study chapters that I'm going to go into talk about how they're able to generate or contribute to decarbonization, to definancialization, and even to democratization of the economy and of society. But of course, as institutions, they are contested. Public banks are contested institutions. They're not fixed entities. They're not essentially good or bad, but they, one of the points I hope that you get out of this talk is that they're made and remade in particular contexts, in place-based societies, and they're subject to power struggles, to the pull between contending public and private interests, wherever they happen to exist around the world. But they're also, and this is another point when I go through the sort of topics of decarbonization, definancialization, democratization, is that they're contradictory. There is no perfect public bank. Public banks are not, are simply by the mere fact that they're owned by a government or a public authority, they are not necessarily going to do good for that society. Or even when they are contributing to things like decarbonization, often they're doing the opposite at the same time. So one of the grand challenges that I think we need to face when we're talking about public banks is how to sort of smooth out the contradictions, how to align public banks with the values that we want them to pursue, things like democratization, definancialization, decarbonization, without them themselves sort of working at odds with themselves and funding carbonizing energy on one hand and decarbonizing projects on the other. So I'm going to go over a few of these. I'm going to talk about brief all of the case studies I deal with the book. There's 6 of them, 2 for each main topic. And then I want to lead that into a little bit of a reflection on prospects for Canada, but also, I think importantly, I want to share a little bit of the struggles that are going on around public banks in North America today and how those can be sort of positioned within our own lives to think about the future of them. So it all kinds of comes together, larger, big sort of history and theory, and then thinking about those in a particular context. So one of the chapters, one of the key chapters in the book is on decarbonization. And the point of this chapter is to illustrate that banks are capable and are leading in many cases decarbonization. For example, in terms of the data available, while public banks, have about a quarter, public banks still control a quarter of all banking assets, public and private, while they only control a quarter of all combined banking assets in the world, which comes to about $280 trillion or something. they invest as much and sometimes more than all combined private banks. So public banks are really, in many sense, disproportionately contributing to projects that are decarbonizing the economy. And above all, the China Development Bank is one of the most aggressive lenders into decarbonization projects, has invested heavily into solar energy, and has adopted a quite, in many regards, green agenda within China. But of course, as we well know, this is probably one of the most contradictory banks in the world, because it's also then paving across half of the face of the earth with the Belt Road Initiative, and is also deeply engaged in financing airports and energy that is also coal among them, that is a highly carbonizing one. But it's also an interesting bank simply for the fact that it did not exist before 1994. It's a relatively new bank, and now it's among the world's largest banks, itself holding around $2 trillion in assets. On the right-hand side there, you see the NIP, the Nordic Investment Bank. And that bank is about 100th the size of the China Development Bank. But it too is interesting because it was created in 1975 in response to an explicit environmental crisis, the contamination levels of water in the Baltic Sea. And the bank, in one of its first projects, was really to help clean up the waters, the seas in the Nordic region. And has since then been one of the sort of lead financial institutions in terms of contributing to a sustainability agenda, leading in terms of developing a sustainability policy as a bank itself, and setting quite firm floors for what it will and will not do. And it's in fact bolstered that I think late 2021, I would say this year, but within the last few months, by writing a new sustainability policy that is sort of is basically said we are not going to fund any kind of carbonizing energy, period, anymore in the future, which is good because it actually had quite itself as well a contradictory record in terms of funding decarbonization, where at least on average yearly about 40 to 50% of its funds would go towards that decarbonizing projects or environmental projects, which meant at the same time at least half of its funds were supporting projects that were negatively affecting the environment. So it's evolved and changed with the times and taken on a more aggressive decarbonization agenda. These two banks feature in the chapter on definancialization. So on the left is the NABARD, which is the National Bank for Agriculture and Rural Development in India. It has about $70 billion in assets. And on the right is to your neighbors to the south, the Bank of North Dakota, which is the only mainland public bank in the US, and it's been around for 100 plus years now and has about $7 billion in assets. But one of the features that you can point to in both of these banks is how they draw in otherwise mobile flows of finance, either in international markets or domestic markets, and they are working to explicitly fix those flows of capital within their communities, within their societies. So in the case of India, it's obviously a large country, but they're focusing on rural areas and rural development. And North Dakota, really its founding purpose was to provide an alternative for the state to Wall Street banks, back in the early 1900s. And it continues to play that function of really, capturing flows of capital and distributing it to local banks, community banks within the state. And in that way, begins to protect or provide a shield for those very different societies from the otherwise highly financialized, rapid, short-term flows of capital. The NABARD is very interesting because the government has also set very explicit lending criteria for rural areas of the country. And so the NABARD also becomes a tool by which the government draws in savings from other commercial banks in India, both public and private, through sort of committed, these other banks have to commit a certain portion of their lending, and if they don't to rural communities, then they have to deposit with NABARD, and then they go on, and it then goes on to distribute those to rural development, agriculture, farmers, water, and increasingly a whole range of sustainability projects. And again, in both cases, quite contradictory to the extent that Navarre definancializes the economy. It's also been quite a strong proponent of microfinance. And those of us who know microfinance know that India is a highly contradictory case and can be quite an exploitative form of local finance. And the Bank of North Dakota has not always been the most responsive, let's say, to societal aspirations. And with the struggles over pipelines, Dakota pipelines, and resistance to building of them within the states, it in fact, gave a loan to help pay for police to police the resistance to the pipelines in the Dakotas. So again, high contradictions in both of them. The next institutions are the ones I want to pause on. I'll go into a little more depth because they really stand out, and they're the institutions I like to talk about the most, and in many cases have become sort of key examples, both of greening public banks and of democratizing them. On the left is the German KfW, one of the largest development banks in the world. And on the right is the Banco Popular, y de Desarrollo Comunal, and of community development in Costa Rica. I'm going to go over them in turn and kind of develop a couple of the key points on both of these. Focusing or sort of centering the discussion around questions of democracy, but also their sort of environmental projects. So in the case of the Banco Popular, I'm sorry, the German KfW, the Reconstruction Bank, created in 1948, has today over 600 billion euros in assets. So it's absolutely enormous. It is one of the pillars in the German financial system, where they have these large development banks like the KfW, but also more regional or state level ones, alongside pretty powerful private commercial banks, but also alongside an extremely powerful, the largest credit union, the Sparkassen system, or local community banks. And so it's these kind of three pillars that contribute to the German financial system. And a side note, the Sparkassen, the community banks control nearly $2 trillion in assets. It's absolutely enormous credit union system within the country that works in collaboration and often together with a bank like the KfW. So the KfW is a development bank. It won't lend directly to a household or to a particular company, but it creates programs by which it on-lends through local banks or other commercial banks. So that's its sort of main focus. But it will lend directly to municipalities or to very, very large corporations or to governments and so on. So that's a particularity of a development bank. This KfW is in the chapter on democratization. And that's important because it is an example of a bank that is the governing board, the highest governing board on it, has 37 different members. And the two chairs of it are government ministers, one from the Minister of Finance and the other one from the Ministry of the Economy and Energy. And then there's a whole range of other political representatives that fill in, I can't remember exactly, but quite a number of the other positions within the bank. Not all of them by any means, because then the board also draws in small and medium-sized enterprise representatives, 4 representatives from trade unions, reps from the cooperative banks, from mortgage banks, from the private banks, from industry, and there's going to be a number of other sort of directly specified sort of sectors of the economy that have formal representation in the bank. And so you can really speak to this institution as a representative public bank that has direct connections to the government, but also to society. And it's very much understood as that, both within the country, in the society, within Germany, and within the bank. It is understood to be a tool of government, which, I'm Canadian by birth. I know the North American context very well. And there is a very strong resistance within conventional narratives, conventional economics, and desire that if you're going to have a public institution, you need to set up all these firewalls. You need to create, particularly in financial institutions, you want it to be, fully independent boards. You don't want necessarily government on any decision-making forum of particularly financial institutions, because it should act independently in the interests of the bank. But in fact, it's quite an anomalous model, and certainly not the model of some of the most successful public banks in the world. It's quite the opposite, where they build in direct political representation on the board that's also matched by societal representation, so that you get a balance and you get accountability and transparency in terms of how the bank is made and how it is run, which is fundamental in terms of the transformation of a bank like the KfW. So I argue in the book that it's the greenest public bank, the greenest bank, period, in the world. It has moved substantively towards greening its investment portfolio. It actively supports energy transitions, energy events in Germany. It has begun to explicitly tie and report on its lending through the SDGs. It's even going beyond that in terms of its offering very explicit support programs, for example, to municipalities in Germany, where if they're trying to green or reduce carbon emissions, they'll set up a program for municipal retrofits or reduced energy and whatever energy transmission. They'll set quite favorable terms for that. And then if the municipality exceeds the terms of the agreement, then they'll even give back bonuses up to 12.5% in terms of the cost of the loan. So aggressively pushing energy transition as a matter of public policy, and not having to negotiate with private banks and who's going to get a cut of the interest or whatever, because the KfW also does not have a profit mandate. It has no explicit need to turn a huge a profit ever, and its rate of return is remarkably low. It's like 0.02 return on assets, which would be about a tenth of what, or less even, of what any normal private bank would ever accept in terms of its profitability. So profit is not its motivator. Its motivator is to deliver on public policy. And when you link that to its governance model, you see the rise of the Green Party in Germany in the late 1990s. Then you see the beginning of the transformation of this institution as an expression of government priorities. And it very much acts and understands itself as such, as a tool of government. And therefore, this then becomes the source of its credibility within society, and why there's no real discussion within Germany of ever privatizing this institution. The second one I want to then focus on is the Banco Popular in Costa Rica. So this bank goes back, it was created in 1969. It was championed by the president at the time, Torrijos, but it was actually a woman, a deputy. Her name is Cecilia, I can never remember her name, forgive me for that. Cecilia Gonzalez de Penwood, who was really the champion of the history of this bank and saw that the workers of Costa Rica were being exploited through usurious loans, had sort of few really accessible options in terms of where to put their savings or where to get credits. And so they created this as a government initiative, it's Banco Popular in 1969, as a bank that is owned and controlled, and this is stated in law, by the working class of Costa Rica. So it's this odd mix. It's something like a cooperative or a credit union bank, but it's also very much a public bank. And if you ask, and I've conducted interviews with them in Costa Rica, depending on who you ask, like, are you a public bank or are you a private cooperative bank? And people give you different answers. They understand it as both. And so it's this interesting mix. And I'll explain how that sort of comes into its governance model in a moment. But whereas the KfW in Germany has about 600 million euros in assets, or US dollars in assets, Banco Popular has about a tenth of that. $7 billion US in assets. And so in the book, I try to play with different examples that are extremely, massive banks, like the Indian bank versus the much smaller American North Dakota bank, the Chinese Development Bank versus the smaller Nordic bank, and in this case, the massive German bank versus the smaller Costa Rican bank, just to sort of illustrate the diversity and difference in sizes of these kinds of banks, but nonetheless have very interesting contributions to society. So one of the most interesting parts of this bank, which I call the most democratized bank in the world, is that public bank in the world, is its governance model, where and you see on the picture, on the large picture on the right-hand side, many people sitting at tables, they have at the highest level of governance in the bank is what they call the Assembly of Working Men and Women. And it's an assembly of 290 representatives from specified by law that come from 10 different social sectors like cooperative, teachers, unions, and so on, across Costa Rica, who then send their delegates to this assembly in the bank, who then become the highest governing board of the bank, who then set direction, engage in national discussions. They just launched another sort of national discussion on the future of the Banco Popular a few months ago. And this is all launched by, these are the sort of direction given by the assembly. Then I'm going to skip down to the bottom right picture there. And then their board of directors, sort of or management level, or I don't know, supervisory board, if you will, of the bank, is called the National Board of Directors. And the assembly elects 4 representatives of the workers to sit on that board. And then the government then assigns 3 government representatives. So that's at the board level, it's a mix of both workers and government representatives, and obviously have a significant hand in shaping what the bank does, and on a much more day-to-day basis, its policies and so on. And so it's this interesting mix of public and cooperative and private. Therein, as an expression, I think, of both this workers' assembly and the nature of Costa Rican society and its history with cooperatives, but also more progressive history politically in the region, certainly. Some of the things that emerge in this bank are extremely interesting, which is then that picture in the middle there. And the middle part of the sort of government side, an expression of this is the Permanent Women Commission. So by law, now, Banco Popular has to have 50% represent equal gender representation. So in the board right now, you see 4 men and 3 women. It will vary, the next time it'll have to be 4 women, 3 men. So it'll vary back and forth, depending, but they can't always have 4 men and 3 women. It has to switch. And so one of the bodies that's responsible for ensuring gender representation on the board, equal gender representation in the assembly, and on every major decision body that both within the main headquarters and then nationally in its smaller sort of regional decision-making bodies, is the Permanent Women's Commission, who then have that responsibility to ensure that both women have voice and their voices are properly represented within the functioning and decision-making of the bank. And so its democracy is also an expression of a very inclusive type of democracy, designated in terms of different social sectors, but then also along lines of gender. It is also increasingly becoming a force for the greening of society. And so when I was doing interviews with the bank a few years ago, they took me up to a community north of San Jose in San Marcos, where they showed this interesting collaborative project between Copalesca, which is a worker energy cooperative in the region that's responsible for, if I'm not incorrect, about 20% of the energy generation in Costa Rica, and the local branch of the Banco Popular. And on the bottom right-hand side, I mean, this isn't a national park in the region. On the right-hand side is an illustration of why it's important, which is that it's a central sort of valley for water that collects an enormous amount of water that then flows through the rest of Costa Rica. And so this particular national park close to San Marcos is a key sort of filtering system, collecting and filtering system for the national water supply. But it become fairly commercialized. There was a heavy sort of farming and a lot of pastures, and it was really eroding the water quality. And so this was recognized by the energy producer, Copalesca, and they made a decision among the members that they wanted to reclaim this area and rewild it. And so they decided among the members, we're going to take a little bit extra, extra money on your energy bill. And then what they did is they went to the Banco Popular and said, listen, we want to go and start buying up this land. And the Banco Popular said, great, we're going to help you with it. We're going to give you loans at very favorable rates, at cost. And then they developed this collaboration where they started buying up the land and rewilding it. The collaboration then even got more interesting. On the top left-hand corner of my screen anyways, you see that building there. They then decided to construct this sort of interpretive center that became a sort of a form of explanation of what they're doing there, but also linked with local universities in terms of teaching, students, about how to rewild certain areas, about, feeding systems, water, and so on. So it became this incredible public cooperative or cooperative public relation, I'm not quite sure how to name it, but that really centered on the fact that they could get the financing to do this in a way that supported the aspirations that they wanted to do in terms of the community and the energy cooperative. So I want to sort of assert two things at this point, two theses. One of them, the first one is kind of what was on my job, or not the job, the presentation description, which is that something that I think is important to me is that we understand that public banks are dynamic and contested institutions. I'm just going to read it out because when I write it, it sounds better than I try to explain it. Within the public spheres of states. And in this view, the view that I develop, public ownership itself determines nothing, but it does open up a particular realm of possibilities, much like we see in the example I just showed you. The change becomes possible and is a result of social forces making it so, if within the structural confines of gendered, racialized, and class-divided capitalist society. So they're very, public banks aren't essentially nothing. They are made institutions, and how we make them then determines the meaning of their publicness, if you will. The second thesis then explains why this matters. And what I also argue in the book is that from a pro-public and social equity vantage point, there's little hope of a green and just transition without powerful public banks that can be democratically commanded to function in the public interest. And so they're both contested, but at the same time, what I believe and what I advocate is they're also, in many ways, our only hope. They're not the only thing we need, but they are a necessary condition of any just and green transition. So this brings me then to some discussion of prospects for Canada. I'm not going to explain all of these, but just to make the point that public financial institutions are nothing, again, that unknown to Canada. The CMHC is a massive sort of public financial institution, has over $200 billion in assets. The Business Development Bank, the Export Development Bank are all public institutions. And then your neighbors to the west have the Alberta Treasury Branch, which has about $6 billion in assets. And then you have two quite new institutions, the Canada Infrastructure Bank and the NBC Fund in British Columbia, which is one of the institutions I've been working with, in the sense Canada's newest public financial institutions. And again, I have a little note there so I don't forget, but also remind you that we'll be hosting a conference on public banks in Canada in Ottawa on the 14th of October of this year, and be sending information, but just keep your eye open for that. Part of that conference will be challenging the Canada Infrastructure Bank and its mandate to date. saying, as partly, questioning its public-private partnership model, it's leveraging private finance model, and really even pointing to the fact that even on its own terms, it's largely failed. But then asking the question, well, let's look at some of the more interesting things it's been doing. Direct funding to municipalities at long-term low interest rates. This is the kind of bank we want to see in Canada. This is the kind of public bank that we should be encouraging, a bank that begins to use its potential within the public sphere to shield communities, to shield public enterprises, to shield cooperatives, to shield Indigenous communities from the dictates of highly financialized, short-term, private sort of loan programs that are only trying to maximize their short-term returns by minimizing risk. So we want to put forward a new, different vision for the Canada Infrastructure Bank. On the bottom, then, is just a very, it's interesting, the NBC fund that the British Columbia NDP have created, and it's just sort of coming into existence now, a new $500 million fund, is been tasked with a whole range of, very progressive and the kind of values that, I like to, I personally espouse about green transitions, around reconciliation. It has a triple bottom line. But then again, it's still trying to find its feet of what is it actually going to invest in now, and how can it, target and really use that 500 million to drive transformation in the province without that money, in a sense staying in the province, but also leading towards inclusive, greener economies. And so that's one of the challenges of that particular institution. And so it just, these are the kinds of questions, the prospects that we're thinking about in terms of sort of catalyzing or evolving public banks so that they're greener and juster institutions. I think I'd like to sort of wrap up here in about 5 minutes or so we have plenty of time for discussion. So this is the point around public banks really are what we make them. And we are at a point now in North America where public banks are emerging as a node of social struggle, both in terms of something like NBC Fund, the creation of that, what is it going to represent, who is it going to function for, the Canada Infrastructure Bank leading up to its 5-year review this year, how can we sort of press for the kinds of reforms, the kinds of programs we would like to see. But in many ways, the most inspiring and interesting struggles are those south of the border right now. And so I've been working as a critical friend with the Public Bank Los Angeles movement, been engaging with a similar movement in New York. And for several years now, these grassroots movements, and very grassroots, like local activists, activists that are working in food banks, activists that see the impacts of the global financial crisis in 2008 and 9 on marginalized Black and Brown communities, that they see the long-term sort of negative impacts of highly racialized lending practices among the mainstream banks, private corporate banks, that disproportionately impact underrepresented communities, visible minorities, and so on. And so that they are thinking of how to create and struggle for a new type of public bank that is going to directly confront those. And this is something too, something like NBC, it is being tasked with confronting reconciliation in Canada. These are really difficult. These social problems are, incredibly difficult to untask. But finance is really, at the center of that, not just in terms of, shipping money out, but making democratic decisions over, as a community within those institutions of how you're going to confront our grand social problems collectively around reconciliation, around reparation for visible minorities, around economic development in Black and Brown communities in the US. And it's a struggle we can win, and we are beginning to win. So San Francisco, I'm part of a coalition. We're going to be, or a consortium, advising the city on the newest public bank in the United States in 103 years. So they're in the process of creating a new city regional bank for the city of San Francisco. And they're taking explicit on board the struggles, the aspirations of the social movements that have led to this point of calling for a proposal to design and create this public bank. So there's incredibly exciting things going on south of the border. But it's also, and I'm going to wrap up with this. There are great prospects for similar types of struggles in Canada. That public banks can be, and to the extent that the ones we have can be reclaimed, and to the extent that something like Canada Infrastructure Bank exists, or to the extent that different political parties might be thinking of creating new public banks similar to those in the United States, they really ought to be understood as a tool for catalyzing green transition, for becoming a hub of recirculating money locally in terms of notions of community wealth building, of not sort of letting extraction money from cities, regions, municipalities being extracted and sent abroad through large multinational corporations, but supporting local development, local procurement, and so on, and using public banks as a repository for city savings, for large university savings, rather than necessarily putting into private corporate bank that doesn't have a mandate to support the city, the community, or so on. But also a central role in the provision of equitable public services. Jesse mentioned the research we're doing on public banks and public water provisioning. We just finished a study on Europe, and now we're expanding that to Latin America, Africa, and Asia in terms of how public banks can support something as essential as clean public water as a source of equity, but also challenging, really challenging questions of reconciliation and dealing with forms of development that are very difficult for mainstream banks to understand, to deal with the variety of indigenous communities and the variety of means by which they need or can access capital to support local development, and similarly with cooperatives and local developmental initiatives. So there's to be determined in a sense of how these banks can and should be mobilized. But we're at a point where these conversations are being had, and there's certainly a deep recognition that there's a need for them, that private financial institutions have not responded, have not encouraged equity, they have not been failing on the inclusion, and they're certainly not the levers of the green transition that we need them to be. So let me conclude with that, and thank you very much for being here, and I look forward to your questions and comments. I'm going to stop sharing now.
Thank you, Thomas, for an interesting and stimulating presentation. I think the ideas that you present today would be relevant at any point of history, but particularly the context we're in today make them even more poignant. We're at a moment of at least 3 intertwined crises. We have, in the North American context, record inequality. On the economic front, we have the climate emergency, which we're all very familiar with, but we're also emerging from the harsh reality of this pandemic. And this time has really created a window for reflection on what we expect from our public institutions. It's certainly shown that the neoliberal myth of the budgetary limitations of the state to engage productively in advancing social and economic progress was in fact a myth. When society was threatened, the capacity to generate liquidity and support was mobilized very quickly. So now your ideas, I think, are more relevant than ever. I think they will generate much discussion here today. So thank you for your presentation, and we'll pause for a moment here to end the recording and open up the session to our audience.
Thank you, Jesse.